can take back the screen.
Yep.
And they were asking how you got to this screen again, actually. Can you
All
just
right.
show your
So I just
walkthrough the
went to,
difference?
I just use SPO as my default. And then I went under the stock menu price action and I picked dark pool trading.
Awesome.
Just to kind of show you that in the stock, and it's because people ask about dark pools, and it's important to understand what they are, why they exist, and do they exist for options or just stock and so forth. So I think it's just important to understand that because I think when people ask about dark pools in options and then they don't have all the information because they don't exist for options exchanges, right? But why not? And why do dark pools exist? Um, so with with stocks, right? When we look at the uh, stock market, um, we have public exchanges, and what the public exchanges are is that uh, anytime you put in a bid or an offer, right? Or like a limit order, um, those will get displayed. Those are accessible to the public. People could see your resting order, especially the NBBO. But if you pay for a private feed, like say the New York Stock Exchange or NASDAQ, you'll get a depth of book. So you could see the resting orders, below them, below the displayed market. So if somebody's bidding for 1 million shares of stock, if you pay for that feed, you will see that, you know. And those are the public exchanges. And when the high frequency traders started trading, um, a lot of because of those rules, right? Because of the rules, uh, and the way institutions were placing uh, their orders on the specialist book. The high frequency traders, when they started to detect this, they were creating algorithms um, based on that information. Right. So you could see the information where the book is thick or where it's thin, right? Or where the book is starting to the demand on one side, below the MBBO, above the MBBO, if it starts to build up pressure, and it thins out on the other side, well, high frequency traders started to create algorithms um, based on that information. Right. So, think of it as, if the MBBO is the displayed market. We have the bid and the offer, but that doesn't show the entire picture because the 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 order books, right? The order books are made up of limit orders and resting orders that people are placing. And that information is very valuable, right? Because you can see the imbalances of the supply and demand. Um, and the exchanges, once they went public, when they went, they what do you call it, demutualize? Well, right,
Yeah.
when they used to be nonprofit exchanges. So when they were nonprofit exchanges, really the specialists only saw the depth of book. The specialists displayed the bids and the offers from the MBBO. Those were always available publicly, but nobody really got to see the depth of book. Uh, and then when the exchanges went public, they became for profit. So the New York Stock Exchange, the NASDAQ exchange, all of them are right now uh, for-profit public exchanges. So when they went to the SEC and they said, well, we want to sell, this is valuable information, right? The depth of book. is valuable information. We want to create private feeds that we could sell and uh and and generate income off selling that information. Okay. So that's kind of like the start of it, like building up to these dark pools. So once they started selling those feeds, the SEC approved it. New York Stock Exchange also started, they selling their own uh, proprietary price feeds. Um, there were traders who knew how to use that information to create algorithms and make profitable high frequency trades, right? Because if you're a high frequency trader and you're not a market maker or specialist, you don't have the same obligations, So a specialist or market maker, they are liquidity providers, right? So liquidity providers they're passive. But a high frequency trader doesn't have to be passive. They can be active. They could just react and take markets. Um, so when that happened, um, the large institutions or large traders that were putting these orders, you know, said, well, that's unfair, because if the high frequency traders are seeing our orders, they're going to run up the book on us, run down the book. And because this was already SEC approval, what do you do? Right? Because now you got these institutions where like, how do we trade in this environment? We're getting, we're getting exploited. Our orders or limit orders are exploited. So then what happened was that the broker dealers said, well, to protect our customers, we want to create our own private matching engines where they don't want to put their order on the public exchanges because when they do that, everybody will see it. So we're going to take their orders and hide the intent, right? So you could hide. So you got 1 million shares to buy. Well, why do you have to, why do you have it's not fair if you show it because you're showing your hand, right? And then other people could, uh, front runner or whatever. So to be able to hide their intent, the SEC approved these private broker deal exchanges. So like Goldman Sachs, Knight, whatever, they could create, Merrill could create these dark pools and match up orders on their private exchanges where they don't show the bids, they don't show the offers, but when they meet, when they have a match, they'll they'll match up that trade, and once they match up that trade, see these are the dark pools. Once the trade matches up, then it has to get reported to the trade tape, right? Because the trades themselves do need to get reported. You can't, those are still the rules. So you can't like do a trade on a dark pool and then not report that trade. So trades are reported. So that's what's happening. That the trades that happen in a dark pool get reported. So these are all trades. The indications, the bids and offers of where you want to buy and sell, though on the dark pool, we don't see them. But there are multiple dark pools. There's no one dark pool, right? There's dark pools that are private exchanges that you would have to get approved to trade in there. Okay, so not everybody could trade in every dark pool. Some dark pools actually they connect to each other. Some dark pools don't connect to anybody except for their own customers, and they're high frequency traders that they don't want in there. And if they don't want you in there, they don't have to. It's not a public exchange, it's private, right? So we're like, if we only want our 10, 20, 30 customers trading in there, they want to trade amongst themselves, they agreed, that's it. So they could exclude people from trading in a dark pool. and essentially those dark pool operators, they do want retail customer flow because the retail customer flow are not um, high frequency traders that have these advanced tools, that have superior information that could get, quick quick information or read the tapes quickly and stuff like that that could exploit certain um, let's say inefficiencies. All right. So retail traders don't really have that ability. So the retail orders are considered the uninformed orders. So people actually pay to get the retail order flows going into their dark pools. So that's for stocks. Okay, that exists for stocks. Options, the bids and offers have to go to a public exchange. So there's no dark pools out there that, are putting up, having streaming orders, that move along with the market and then a trade happens and they occur. Like they don't have that kind of mechanism. But with options, sometimes what you'll have is a floor trade, which is a negotiated trade. So floor trade, it's not really a dark pool, but it could be where a large trade. Let me see, let me see if I could find where would I have the floor trade? Let me see if let's see if there's any in see if there are any in SPY. So floor trade is kind of like a trade that gets negotiated. So here we didn't see any in SPY or not enough to make you a 1%. These are trades that are, use human touch. It's where, maybe one side is looking, one trader or institution, or they're looking to do something that either they need more liquidity or price improvement, or they have this complex trade where they want to have a broker contact either the market makers, the specialists, or their other customers to see if they're willing to trade with them on the other side. Okay, so these are they're not streaming like, the other dark pools, but they are kind of negotiated trades. And they happen, throughout the day. You'll see like some stocks, they'll have floor trades. So these are like kind of like maybe not, I don't want to say dark pool trades, but like, similar in a way that they are being negotiated in a sense, out there between, usually it's a bigger trades. Usually those trades are not small trades, but bigger size trades because if a broker is handling it, right, there's an extra fee to it, right? That when you enter in an electronic trade and it goes to an exchange, well, those trades usually have small fees because it's all electronically handled, right? There's no broker on the other side, human touch. The computers are handling it. Once you get a human touch involved, well, there's extra commission in there. There's human touch. There could be negotiations between multiple parties. So those floor trades would be maybe something you'd want to go and look at. Well, let's see if I could find some here. Let's see an option block trade screener. So this is the option block trade screener, and here's trade condition. Let me see if I could find it on the. So this would be on the. Let me see if I have it available here. Here, floor trade under execution. So these are like bigger size trades, floor trades that, so you could see over here, these over here, SPY, QQQ, we got 3,180 floor trades. Some of them involve multi-leg. So you could see here, these are multi-leg trades, 413.06, two multi-leg trades. These are not multi-leg trades, regular. And those would be more of the trades that were handled by a broker, human touch. So hopefully that helps, in a sense, like maybe that's something that you would want to maybe look at. But
Yeah,
as far as
Santos said, thank you for the explanation. It is very helpful from filter in my analysis, he said. So
thanks, right. And then as far as like
he is
dark,
asking, he says regular would be single leg.
yeah, so a regular weight trade, right? If it would be just a single leg trade, because if it's a multi-leg trade, if it's entered in as a complex order, multi-leg trade, meaning that you need more than one leg to get it executed. So call spread, a put spread, a butterfly, could be 5 legs. But if you needed multiple legs to get executed at the same time, right? That if that's the condition, then it would be a multi-leg. It would say multi-leg trade. So in this instance, it wasn't designated multi-leg, so it didn't, to execute this trade, right? To execute this trade the way it was entered, it didn't require a simultaneous execution on a different option at the same time. Okay, so multi-leg would have said there's another leg to it. So here, in the QQQ, we could see, this call and put are probably related, 300, 300, because they're both multi-leg trade. So that's so any multi-leg trade means that there's something else that had to trade simultaneously with it, another option leg that traded with it. So when we look at multi-leg, by the way, just the multi-leg alone, we do have an analyzer, because as you could see here, you'd have to figure out each multi-leg trade and which ones, by the timestamps and the exchange and all this, which ones are related, and then try to figure out, okay, well, what is the potential strategy here? What were they doing here? So this would be a monumental endeavor to do by hand. You would need a machine to help you out. So that's what we have.
This is one of the many great values of Market Chameleon.
Yeah. So what we did was create a tool here in multi-leg trades. If you go to here, this shows the multi-leg trades, and we matched up, the with the timestamps and so forth, and made an interpretation of what we think, the most likely strategies. So here you have, list, there's over 5,600. You could screen these, right? And here are the top ones. I'm going to close the filters, but NVIDIA, with the most contracts, 175,000, look like there was a diagonal double call spread. So you could see September 27th, the 121, 124, October 123, 128. So if you open it up, you'll get more details on this trade. See, there are 4 legs. And what this looks like, just eyeballing it really quickly, and you'll get used to it if you look at this a lot. But what this looks like was September 27th was expiring, and it looks like there's a call spread potentially on the September 27th, 121, 124. And this call spread was potentially, it looks like, closing out and rolling into a call spread in October 4th. Right. So I'm just eyeballing this. I'd have to do a little bit more research to confirm, that that was going on. But if I'm just looking at the September 27th, it looks like maybe it's selling out of a call spread. So you got selling over here. Here's the prices, selling this call spread and buying this call spread, maybe just rotating it to different strikes to the next expiration, to a different expiration that's further out. So that's kind of like, and then you obviously you want to go back and see where maybe this one potentially occurred. We could go back further, but those are just the type of details that would be very hard, because I just eyeballed this, really quickly while we're sitting here, but that would be very hard. And by the way, I'm not sorry, that would be very hard to do for anybody by hand, even with the data available. Even once you have the data available, that's to try to make all those connections would be extremely hard. But I'm going to stop right there, Will. We're at 9:30.
Awesome job, D. Santai was very thankful. He says, I'm discovering new features every day on the MC platform. A lot of nice comments about the platform. I ask everyone, if you get a chance, just copy your comment and put it in the YouTube comments. That's always helpful. Rob says, now that I'm used to MC site, it is quicker and more comprehensive than Schwab or TD, whatever was. So thanks, Rob, for the nice comment as well. Great job, Dima, as always. Nice start to the trading week. Everyone have a great trading day. Thanks, buddy.
Thanks, everyone. Have a great trading day, and hope to see you guys tomorrow.
Have a great day, everyone.